morning and welcome to Reuters Today. I'm Marion Beaumard. Four of the world's biggest central banks are in the spotlight, with monetary policy meetings taking center stage ahead of the UK referendum next week. The Bank of England on Thursday will concentrate on those Brexit fears, but the market also wants to know what the Federal Reserve, the Bank of Japan, and the Swiss National Bank say about the prospects of Britain leaving the EU. Risk-off sentiment has intensified, very much bolstering the bond market and those safe haven currencies, the yen and the Swiss franc. At a time when currency markets are very much in disarray, the expectation is that we might see more of a pause from central banks to gauge market reaction. Until now, there was little expectation that the Leave camp would gain steam here in Britain, but recent polls show that that gap is very much narrowing quickly. We spoke with James Bevan with KPMG earlier, and he says the political climate has changed in recent days.
I think there are two things that have changed. First of all, we are much closer to the vote, and as is always the case with these event risks, the markets typically stand up and want to be counted very close to rather than well before the event. The second issue, of course, is that the polls are suggesting that there is now a greater probability of Brexit taking place, whereas previously there had been a comfortable consensus in markets that it would be a Remain vote.
Overall, investors taking on a risk-off approach this week, but let's take a look at what stocks will be in the spotlight today. No resolve just yet for British software maker Aviva, who's been in talks with French firm Schneider Electric 6 months after the French company pulled out of a deal to buy a majority of Aviva Group. Not a great week for Air France either. Investors monitoring the ongoing strikes by French pilots. That, of course, the airline said that would cost it more than 40 million euros in losses. But of course, it seems consumers are getting some retail therapy this summer. Swedish budget fashion retailer Hennes & Mauritz, better known as H&M, says that sales rose 9% in May, although that's slightly lower than forecasts. But the world's biggest clothing retailer, Inditex, has reported overall sales have jumped more than 6% this year, with consumers opting to buy products online. Let's turn now to the markets to see how we stand in early trade. The FTSE 100 down 0.3% at the moment, while the FTSE Euro First 300 also lower this morning. Most major indices very much struggling to find footing ahead of the market uncertainty this week and next week. Investors can't take refuge with energy stocks anytime soon. Once known as one of the traditional safe havens, markets are digesting the latest monthly report from the International Energy Agency, forecasting a small surplus for next year. The expectation is that oil markets will not find a sustained balance until well into next year, even off the back of solid demand and supply disruptions we've been seeing. The outlook for oil is relatively subdued for the start of 2017, but the IEA does expect demand to climb for black gold later in 2017, with total demand going up by about 1 million barrels per day to a little over 97 million barrels per day next year. That's it for now. Don't forget, you can follow us on Twitter at Reuters Insider and, of course, watch more videos online at Reuters.com. I'm Marion Beaumard, and this is Reuters.